Hey everyone, and thanks for jumping back into the Cryptoverse. This is a premium video, so I hope you guys enjoy the content. Today we're going to be going over Ethereum hourly price analysis, so looking at statistically over the macro scale, is there a particular hour of the day that tends to perform better for purchasing Ethereum rather than just throwing in an order at whatever time you feel convenient? So remember, the best day to purchase Ethereum, historically speaking, is definitively Friday. And the best day to purchase Bitcoin is definitively Monday. And even if you look over the last several weeks, Monday or around Monday tends to be a small dip in the price of Bitcoin. So I think, while short term, this could be, this obviously is just a coincidence. I hope you can, focus on this and get a better appreciation for, in general, when is it better to buy various coins and when might it be better given the hour of the day. So let's go ahead and jump into Ethereum and look at the hourly price analysis. So in the bull run we had during 2017, you can see that most of the gains on a given day were concentrated after 12 p.m. with a huge downside in general at 1 p.m. Okay, but most of the gains happened between, say, 12 to 11 p.m. This was in the bull market. And again, during the early hours of the morning, and again, this is UTC time, so you need to do the conversion for you and where that would, what time frame that would be for you. And this is looking at the open, so the open at the top of the hour to the close at the end of the hour, and looking at the average percentage change during that time. So again, the early morning hours, so between like 12 a.m. and 10 a.m. tend not to perform that well. But again, it's the second half of the day that performs better. Now, during the bear market of 2018, you can see we had more downtime, so more hours of the day were down, and a significant number of these hours occurred, between 8 a.m. and 11 a.m. And everywhere else it's somewhat sporadic. And the best time during the bear market would have been buying at around 9 p.m. or so, because at least you would have been having a few hours there where the price would have been going up. So either 9 p.m. or maybe 11 a.m. So these were the two best during the bear market. And we're gonna look at just the whole macro scale as well in a few minutes. So let's look at 2019. So 2019, again, buying during these early hours is typically not a good idea. So when we say, Monday at open for Bitcoin or Friday at open for Ethereum, so you can take that and say, okay, I'll buy my Ethereum on Friday if I want to look at historical patterns and know when I can maybe squeeze out a little bit more Ethereum. But you could take this even further and then try to identify exactly what time. And in 2019, when it was more, say, of an accumulation year, again, the early morning hours and, say, the first half of the day, generally not a good time. This is UTC again. And then the second half of the day was better. And then in 2020, somewhat some mixed results, but we're only 5 months in, so we have more than half the year to go to get any types of any finalized results here. But again, what you can see is that certainly between the hours of, say, 12 and 10, you're generally doing a lot better than if 11 p.m. is a down, typically is moving down for Ethereum, as well as 1 a.m. and 4 a.m. So let's combine everything. So, because it's hard to know whether you're in a bear market or a bull market or an accumulation phase until after it already happens. I think that 2019 and 2020 are just our accumulation years, maybe even part of 2021. But if you take everything and combine it, it's pretty clear that purchasing Ethereum at 1 a.m. UTC is generally not a good idea, because over the next several hours it more or less will bleed. And of course, on any given day, this may or may not be true, but it just, getting to a systematic approach of purchasing Ethereum, say every week, or if you're doing it, say every 2 weeks or every month, then maybe you would want to use this to try to identify, I see that, starting at 11 a.m., we start to see some more upwards movement on average than we do in the early hours. So basically, what this would mean is if you calculate what your time is with respect to UTC, you could maybe add on another, say, 11 hours to that to identify the time at which, historically speaking, would be better to buy Ethereum. Now, Here, this chart shows everything next to each other. So I think this is at least useful. You can see the clustering of moves up tend to be during the second half of the day, and then a lot of the moves down tend to be clustered in the earlier morning hours, with not so many in in the second half of the day. And again, we have our risk areas. The risk for a lot of these coins has gone up this week, as many of you have known, and we've been talking about this. We've been preparing for it, right, for a while now, saying, okay, well, Bitcoin gets above the 20-week, this is what we expect to happen. And obviously, we don't expect it to happen for every coin out there. And in fact, I think a lot of coins out there will never see their previous all-time highs again. A lot of coins will just kind of slowly whittle away and die. And I don't cover coins, that I don't think are if a coin is worth covering, then I'll more likely cover it. And there's still a few coins that I haven't covered that at some point I probably will. But just for continuity's sake, I've decided for the last several months to primarily focus on Bitcoin, Ethereum, Chainlink, and Cardano. And they are doing fairly well right now. So you can see the risk levels, and pardon if the price when you see this isn't exactly what it is on the risk chart, just because I have to pick a price at some point when I'm making the report, and then just get the risk level and go with it. But you can see that Ethereum has definitely made a move up, with a risk level getting very close to Bitcoin. And we know that for a while now, Ethereum has been lower. But we expected that, and we said, okay, well, for every week that Bitcoin has been above the 20-week moving average, for me, as I've said before, we just dollar cost average that move. So personally speaking, I'm just slowly moving into Ethereum ever since Bitcoin got above the 20-week moving average. And remember, if you do it vice versa, if you do it to the downside, so convert out of Ethereum into Bitcoin or stablecoins, or let's just say just to Bitcoin if you just want to hold crypto, then converting back at the weekly close, the following, whenever we get back above the 20-week, has always allowed you to accumulate more Ether. And then the reverse is also true, except for one exception. There was one time when, had you converted your Bitcoin to Ethereum when Bitcoin got above the 20-week, and then converted back when it crossed back below, you would have actually lost some valuation in Bitcoin had you done that. And again, I always will hold the majority of my portfolio in Bitcoin, but during times like these where we're above the 20-week moving average, I tend to diversify my cryptocurrency portfolio to include things like Cardano and Chainlink and even more Ethereum. And this is when I'm certainly picking up more Ethereum during times like these, as long as Bitcoin is remaining bullish, and it is still. We're not only above the 20-week moving average, but it also happens that we're above the 50-week, which is higher than the 20-week because over the last year the 50 the prices were fairly high. So we're above the 50-week, we're above the 20-week, and we've been showing in a lot of videos that this usually means a lot of good things for coins that at least have some real world utility. Now, you're going to find tons of other coins that will pump, and I would encourage you not to go chasing various coins, because that's how you can lose a lot of money. Again, this is not financial advice, just tons of prior experience. Don't get bogged down by every single coin you see out there. You need, what I would say is, you choose the projects you believe in, you think they have real world utility, they're going to provide value, and then you wait for those moves to come to you. Just like we've been seeing with Cardano, just like Ethereum, just like Chainlink. We expect these moves to come. It's just a matter of time before they come, in a sense, and we're seeing that right now. So Cardano, when I made this, was around 7.5 cents. I think now it's I think it's around 8 cents or so. Let me just check on the price of it really quick so I can see for the video. Yeah, it's around 8 cents, a little over 8 cents. And I've been saying that the risk level for Cardano will reach around 0.4 when we get to 10 cents. And this is when I'm done buying ADA at this point. And obviously we've been saying that since it was 2 cents. There's been plenty of time to purchase Cardano between 2 and 5 cents. The risk is certainly getting up there. And it's probably in anticipation of the launch of Shelly. The testnet has been doing fairly well. People are, earning real ADA. There's a lot of excitement around it, especially with, it's not so clear when Ethereum will transition to proof of stake. Again, I hold a lot more Ethereum than I do Cardano. Cardano is my hedge. So consider that. I'm not saying I hold more Cardano than Ethereum. I don't. I hold more Ethereum. But Cardano is my hedge. There's about 2,000 different coins you could probably pick from that would claim to be an Ethereum killer. And for me personally, I've narrowed it down to ADA. Cardano is the one that I will primarily be focused on in terms of a hedge against Ethereum. Because you can't, it's not realistic to have like 30 different hedges and just hope one of them outperforms. So Cardano is the main hedge. It's up around 200% the last 2 months. Again, I think this is in anticipation of the launch of Shelly coming up, and so as long as Bitcoin stays above the 20-week moving average, and especially the 50, I'm still bullish on ADA. And once we get to 10 cents, I'm done. I'm definitely done buying ADA at that point, because my risk tolerance for ADA will be completely saturated. I will no longer have a risk tolerance to purchase ADA over 10 cents. Especially when we had 2 years to purchase it at below 10 cents. Another thing I wanted to draw your attention to was the S&P 500. I don't talk about it in a lot of the videos, but it is something that I'm always, it's always good, in my opinion, to be getting index funds. Maybe not always, clearly earlier in the year you would have seen a pretty big crash. But with the S&P 500, I just want to talk about this for a few minutes because, remember, this cryptocurrency bull market, if we're in a bull market right now, still remains to be seen. But if we see a move over the next, say, 3 years where the prices, basically go up, we're going to get to a point where there's going to be another speculative bubble. And that's when all the money is going to be coming in. Your grandma's going to be asking about it. And this is the point where we're going to say, okay, guys, we've had our fun. We've seen a great ROI over the last few years, but it's time to make smart decisions and realize that the party's about to be over. And when the party's over, that doesn't mean you just sit on your money. You want to keep investing it. And this is why I want to include traditional markets. I personally purchase, a couple different index funds on Fidelity, and these are the ones I just stick with. And we've been, I made a public video a while back when the risk was 0.29 and said I was buying back in March. And I'm still buying, but we're definitely getting closer to the point where I'm becoming a little bit more skeptical. The risk on the S&P 500 right now is 0.61. And remember, in March, it was 0.29. I mean, this is significant. You can see the drop here, this wick that came all the way down. And here it is. You can see it came down, and then we're going back up. Now, if you look over the course of the last 100 years, I know this is very compressed, but if you look at a risk level of, say, 0.8, there aren't that many times where we get to 0.8. And when we do, it's very short-lived. So, if the Fed keeps printing money, which is likely the case, if the economy keeps getting, artificially propped up, if we get above a risk of 0.8, then I would likely start selling some there. Just because it just doesn't seem sustainable, especially with the economy the way it is right now. So right now I'm not selling the index funds, but I just want you guys to be aware that the risk has gone up from 0.29 to 0.61 in 2 months. So this is quite significant. And if we go up another 0.19 or so, then I'll probably be looking personally to sell. Now you can do it based on whatever risk tolerance you are okay with, because again, we're just looking at we're analyzing markets. This is not financial advice, and you can always take the time to look at the other charts. I've actually now included the Cardano charts in this weekly report. Now I want to go through a few other things as well. I've spoken about this before in some of the channels that we have. But again, if you look at the top cryptocurrency, so I mean, there's on CoinMarketCap, there's over 5,000. On CoinGecko, you'll see over 7,000. 99.9% of these are completely irrelevant, and in my opinion, are not even worth thinking about. What I've been saying is I'm expecting in this market cycle to see Cardano, Chainlink, and maybe Tezos too. So XTZ is one that I do find somewhat interesting, but Cardano, definitely Cardano and Chainlink, maybe Tezos. I would expect these, so 10, 11, and 12, to start moving up the ladder here. And I anticipate that EOS, Litecoin, BSV, and Bitcoin Cash, I would anticipate them moving down. So I get that a lot of people have various reasons to like these coins. Bitcoin Cash certainly has, a pretty, a pretty large community. I mean, it's pretty niche though at the same time. It's hard for me to really imagine that a coin like this is going to be the future peer-to-peer currency. It seems more likely that a stable coin would be the future peer-to-peer currency, because who's going to go spend their money on a good if they think if they think the value of that currency could be worth twice as much tomorrow? It doesn't encourage spending. Therefore, stable coins, I think, are the future in terms of, say, a peer-to-peer currency. I know a lot of people don't like to hear that, but that is what I really do think. And I feel like if you think about it, it does make a lot of sense. Like, why would you have an asset that can just fluctuate so much? The chances that it actually becomes a peer-to-peer currency that people are using is very unlikely. But coins like USDC and a few others, I mean, potentially the coin that ends up being the future peer-to-peer digital currency hasn't even been created yet. But again, this is a speculative market, and we can have fun speculating. There certainly are a lot of coins that want to take that role, and including Bitcoin Cash is one of them. But ultimately speaking, over the next few years, I would certainly expect Litecoin to drop out. If you go back every year and look at the ranking of Litecoin, it's basically just slowly moving down the list. So, Litecoin, while I do think the price will likely go up in a future, in a bull run, it's just not something I personally hold, just because I think there's a lot of other better projects out there that are, there's more stuff going on with them. I mean, Litecoin, there's hardly any, if any, development going on that project anymore. So the reason people might buy it would just because maybe they see it on Coinbase and they see Bitcoin. If they see Bitcoin cost, like, say, $30,000 and Litecoin costs $200, then some people, for whatever reason, decide, oh, well, I can own a lot more Litecoin in terms of whole coins than I can Bitcoin, so I'll purchase that. And I think that's one of the reasons why it went to 385 during the last bull run. But again, Litecoin is not one I hold, and if I were to purchase Litecoin, it would not be until Bitcoin gets to its previous all-time high of $20,000, because this is when coins like Litecoin tend to move. Okay, it's when Bitcoin gets to its previous all-time high and a lot of interest comes back to the market. It doesn't tend to perform as well in the in-between phases. The main catalyst for Litecoin is Bitcoin getting to its previous all-time high, Bitcoin at the end of its bull run, and also it tends to have a pump going into its halving, which precedes the Bitcoin halving. So, but then it dumps going into the halving. So, Litecoin is one we'll vaguely keep an eye on, but it's not one right now that I have. So I'm just talking about this because I want to give you guys my general sentiments on some of these coins. I can talk a little bit more candidly to you guys rather than it being broadcast to all of my subscribers. So obviously you guys know I hold Bitcoin and Ethereum. XRP, there's a lot of FUD around XRP, and I think it's justified. The reason to even hold XRP, or I guess say the use case is not really clear, because it's not really clear why you need the XRP token. In fact, why do you have to convert, say, US dollars to XRP and then XRP to pesos or something? You could just convert USD to pesos. But this one is not one that I hold right now. And again, this one is one of those that tends to pump when Bitcoin gets to its previous all-time high. So even if it were to ever pump again, I think that it would have to, at least if you're going to see the gains that it's seen in the past, I would wait until Bitcoin gets to its previous all-time high. So this is not one that I currently hold. And it's not even clear if I will hold it. But if you look at one of the charts I published a while ago, the main the main entry point for a coin like XRP is when its Bitcoin ratio gets to 10 to the minus 5. And the sell point is when its Bitcoin ratio gets to 10 to the minus 4. And maybe I'll show this graph in a future video. So right now, the ratio is around 2 times 10 to the minus 5. So essentially what would need to happen is if Bitcoin goes to $20,000 and XRP just stays at 20 cents, then this historically would be the time, if you're going to buy XRP. I'm not saying you should, but if you're going to, this would be the time to do it. So it's not one that I currently hold. And there's definitely a lot of doubt surrounding this coin. Tether, I mean, it's just a stable coin with there's a huge backstory there, as I'm sure you guys are aware. Certainly, I do not hold BSV. That doesn't mean it won't go up based on some different, just the nature of the market, but it's not one I hold. And then again, so these three, so Bitcoin Cash, BSV, Litecoin, I'm kind of expecting them to move down and maybe see Cardano, Tezos, and Chainlink take their place. And I also am not sure that EOS is going to remain in the top 10. Whereas I could see Binance Coin sticking around as long as that exchange continues to be by far the number one cryptocurrency exchange in terms of, say, crypto to crypto trades. So that more or less covers the top 10. I mean, we went to the top 12, and certainly there's a lot of other coins you can look at. I mean, there's Monero, the privacy coin that there's a lot of interest in. There's Dash, there's Neo. There's certainly other coins, but let's just keep it to mainly the top 10, just for simplicity purposes. So let's look at some of these charts really quick. I know this video is a little bit out of the ordinary because I'm kind of rambling on now, but I just want to pull up these charts. So again, Bitcoin looking pretty good in the right now. It's tending to test this $10,000 area again. So maybe if we test it a third time, we'll finally break through. It's possible that we see a repeat of last summer where Bitcoin goes to 14,000. So don't necessarily discount it. I'm not saying it's going to happen, but just because you see people that are drawing that 3-year trend line, which I'm not saying completely doesn't have any merit to it. We're talking about this trend line here. I know a lot of people are thinking this might hold resistance, and maybe it will. I mean, maybe 9,500 is our local top. But at the same time, don't think that it can't break through, because every market cycle in the past, at some point, it did break through, and that's when a lot of the FOMO happens and people just start storming into the market. So consider it a possibility. Be prepared that if we get rejected and we head back to the 20-week, or if we go back to the 50-week at 8,800, then we're going to want to hold that. And then if we go to the 20-week and we don't hold that, then this is where you would want to consolidate your positions. You've taken your gains that you maybe would have seen in some of these coins like Cardano and Chainlink. But at the same time, you don't want to just hold coins forever and then watch them go up and then watch them come down. So just take this into consideration. Ethereum is certainly been moving as we expected. We said if Bitcoin stays above the 20, and especially both the 20 and the 50, we're going to expect a move upwards, and we're seeing it. It's gone from 200 to around 240 in just a few days. So certainly we're going to follow Ethereum. The Bitcoin ratio obviously has been improving again as we expected. So this is all part of our expectations. Cardano. As I speak, I guess it's actually continuing to go up. Let me check the price here on my phone to make sure it's. So on it says it's around a little over 8 cents. So, this is one of the ones that it was just like a couple cents just a few months ago. So watch out for that 10-cent level, because this will be a level that Cardano would need to break through. And you can see the last time that we made a run at 10 cents, the first time we went to it. We immediately got rejected and went back down to 6 cents, back up to 10, back down to 7 or 8, back up to 10, down to 8 again, back up to 10, and then ultimately back down to 2 cents. So I'm sure 10 cents is, or I would speculate that 10 cents is not going to be an easy region to break. And again, this would also correspond to the 0.4 risk level. So if you consider yourself, say, a conservative risk tolerance person, then this could be where you first take your initial profits in ADA. Additionally, if maybe your main goal is not having ADA as a hedge. Maybe you bought ADA because Ben mentioned it a few months ago, so let me buy it. If that's the reason you bought it and your main goal is to say stack sats and just get more Bitcoin, then you're already up a lot with respect to USD. Just in the last couple months or so, if we take it from the very bottom, you're up almost 300%. And so remember, I mean, moves like this typically do see retracements. So don't just expect this to go up forever. It could certainly go up for the next few weeks. Maybe we break 10 cents and go higher. But remember, you don't want to look back on this and in the future and wish you had taken some profits on the way up. So I have not personally taken any profits yet. I said I would buy ADA until it hit 10 cents because, again, it's my primary hedge against Ethereum, and I want to make sure I have enough exposure there. Here's the ADA Bitcoin ratio. So this is always great to see. We're seeing it really break out with respect to Bitcoin, which is incredible, especially considering a lot of coins are bleeding Bitcoin value. And then also the other coin that we like to cover a lot on the channel is Chainlink, and as we speak, it is starting to move up. I think it's currently at around $4.40 or so. And again, Chainlink does tend to perform very well when Bitcoin gets above the 20-week, as we have shown many times, and even its Bitcoin ratio, our favorite imaginary line here, seems to have held a couple more times, and maybe we're going to start heading up again. So I hope you guys enjoyed the video. I like to be a little bit more candid. Let me know what you guys think about this. I know a lot of you aren't super fond of leaving comments, which is fine, but let me know, do you guys like it when I, after going through the newsletter, do you want me to go through some of these charts and give you my candid thoughts on them, or would you rather prefer I just say stick to the newsletter and call it a day, essentially, at that, so you can just go ahead and move on. Coming up in future weeks, we're going to be looking at selling strategies, and the way we're going to do this is we're going to go back and we're going to look at historical risk levels, and had you followed, say, different selling schemes, or based on your risk tolerance, whatever, how would you have performed? How would your portfolio have performed? What are the upsides to allowing yourself a little more risk, and what are the downsides? So I would say look out for this in the coming weeks. I'll probably start with some rendition of it next week. I don't know how extensive it'll be, but again, this market cycle is probably going to last years. We have plenty of time. We'll go through it systematically so that everyone is fully aware of the different strategies and the risk it entails. Maybe the potential ROI that could come with it if historical patterns were to repeat. But again, there are no guarantees. This is not financial advice. We're just analyzing the markets, making somewhat dubious extrapolations, and using that to inform our decisions, which, so far I feel like is working out. So I hope you guys enjoy the content. Again, leave me a note down below. Let me know if you like my pulling up a few different charts and just talking about them a little bit candidly. Let me know what you think, and I will see you next time.